Hey everybody, this is Elliott with Touchstone Financial Education. Today we're going to talk about the markets year to date, a couple of stocks that I'm watching, as well as some international things that I'm watching. But before we do, let's get this out of the way. TouchstoneFinancialEducation.com is our website. Please check it out. Please reach out to us. You can send us an email. We'll respond within 24 hours with any questions or concerns you might have. Check out our classes page as well as our individual consults page. We are here to help you along your financial journey. You could check us out on Facebook under Touchstone Financial Education, as well as YouTube under the same name, Touchstone Financial Education. So let's go ahead and get started. Year to date, the markets have done quite well. Right now, they seem to be a little tepid, and that's typical for this time of year. It's called the summer malaise. They say sell in May and go away, and this year it couldn't be more true. Volume, or the number of trades placed in the stock market right now, are a little bit lower than usual, so it really has no direction. It goes up a little bit one day, it goes down. Now, all is not lost. The markets are still doing well. During these time periods when that market is just kind of in that dead calm, that summer malaise, we do research for the second half of the year. Take a look at those positions you've had. Maybe they're profitable, maybe they're not. If you're going to make some changes, start doing your homework now. Like I said earlier, there are a couple of stocks I'm going to go ahead and mention. But before I do, when you are doing your research, use as many platforms as you have, meaning where are you investing through? It's Fidelity, it's Vanguard, it's Schwab, it's E-Trade, whatever it is, take advantage of all the information those platforms have. And another one I like outside of my platform is Seeking Alpha. They are a wonderful source of information from many different sources within the platform, and that'll just help to confirm or deny the research you're looking at. Now, a couple of stocks that I'm looking at here domestically are Palantir and Intel today. Both have not really run with tech. Well, the exception being, of course, Palantir. It has run, but it's trading in the low 20s. They are a cybersecurity company. They've got both government contracts and they're building out their business for commercial contracts, and all looks well. Analysts have buys across the board, and more importantly, it might be added to the S&P 500 index this year. And what that means is if it gets added, all those index funds out there have to add the position. So it's something to kind of take a look at. And the reason why I like this one is it trading in the low 20s. It's got a long way to run relative to where we think the valuation is going to be in the future. So this is perhaps a buy and hold opportunity. The second one, believe it or not, is Intel. Intel has lagged other chip stocks like Nvidia, like Taiwan Semiconductor, for the last few years, but it looks like they're doing a turnaround here. They made a statement about a week and a half ago that said they are going to be producing a chip to rival Nvidia's chip. So it's something to look out for. It's a beaten up position, which means that when it turns around, there's a whole lot of room to grow. And for you buy and hold investors, that's what we're kind of looking at. So I mentioned these two as examples to show a position or look for positions that have a lot of room to grow, that haven't necessarily run completely with the market, and that's what we want. Beaten up positions, stay with them while they're going through a renewed growth phase, or in the case of Palantir, kind of a newer growth phase because it is a newer company. That's what I'm looking at on the domestic front. Both are tech, of course, but here's the thing, guys. We can also look for opportunities outside of technology. This bull market is expanding despite how tepid things are today. Take a look at healthcare opportunities, also that buy and hold strategy. What are we looking at a year from now, 2 years from now? Healthcare is a great place to do some research. And finally, I'm going to say this, and I know I'm probably going to get a lot of disagreement out of this one, but China has had some problems in and around real estate, unemployment, inflation. We know that. Now, China is pretty much secretive about their gross domestic product metrics, their consumer metrics, etc. But the Chinese government made a statement the other day saying they are working on it. and things are turning around. And that's rare out of the Chinese government, to admit that there's a problem and it needs to be remedied. So it's time to start circling back to China to say, hey, there might be some opportunities here, not starting right now necessarily, but definitely going into the future. You can't count them out in the global economy. So we're going to take a look at Intel, Palantir, we're going to take a look at healthcare domestically, and we're going to circle back to China again, ladies and gentlemen. They will work their issues out, and it's better to get in sooner than later, especially if you have a buy and hold strategy, because by the time everybody jumps on the China bandwagon, guess what? It's probably a little bit too late. So watch for those areas. Again, do your homework, use your platform, use platforms outside of where you invest your money, like Seeking Alpha, and I think you'll be pleasantly surprised about the research that's coming through. Now, real quick on the taxation of that brokerage account, that taxable investing account. Of course, we want to invest in our retirement, our individual retirement account, our retirement plan at work, the 401k, the 403b, the 457b. This is for people who have a little extra cash set aside. They've got their emergency savings. Now they're going into the market on their own to help them achieve their interim goals. And by that, I mean things other than retirement, things other than what you have to wait for until you're 59 and a half. That's the age at which you could touch your IRA and your 401k, of course. So when you're investing through your brokerage account, know that whatever you sell, whether it be at a profit or a loss, there's going to be some taxation there. And there's three forms of taxation on that brokerage account. That is short-term capital gains taxes, long-term capital gains taxes, and dividend income taxes. Let's start with the short. Short-term capital gains refers to selling something at a profit within a 12-month period. So let's say you bought NVIDIA at the beginning of the year, and now you want to sell it and you've made a little bit of money. Let's say you made $1,000. The short-term capital gains rate is your income tax bracket. So let's say you were in the 22% tax bracket and you made $1,000. Well, straight off the top for short-term capital gains, you've got to give the federal government $220 if and only if you're in that 22% tax bracket. For those of you who are in a much higher tax bracket, it plays out a little bit differently. So just be careful. Please consult your CPA or your tax person. On long-term capital gains, any position held 1 year and 1 day, meaning a year and a day, okay, you will pay a 15% capital gains tax rate. That's straight off the top. So let's go back to that $1,000 profit example. We made $1,000 in our position. We waited a year and a half to sell it, let's say. Now we owe the federal government $150 for selling that profitable position. That's it. It's easy. And I think the government incentivizes a long-term buy and hold strategy so you can get hit with that 15% tax rate as opposed to whatever your income tax bracket is on the short-term side. So remember, long-term capital gains is 15%. Dividend income taxes are pretty simple as well. That is a flat 15%. So if you have dividend producing stocks, funds in your portfolio, in the taxable portfolio now, you will pay 15% taxes on the gains from your dividends. And Warren Buffett often says that he pays less taxes than his secretary because he lives on dividend income. So throughout the whole year, he makes quite a bit of money. And can you imagine only paying 15% in taxes? That is like the lowest rate out there. So I want you guys to be mindful as you trade or invest through the brokerage account. You got short term, you got long term, and you got dividend income. Now, let's say you had a loss. You're looking to kind of shore up your portfolio, clean out some of the losers. You can take a loss on those losers. The government allows you to write off up to $3,000 per year in capital losses. So if you have a loss of $2,900 for the year, you could take that and counterbalance it against the gains you have in your account. So we sell a profitable position, we sell some losers, that'll balance things out in the end. Let's do this though. The government gives us the opportunity to take a look at all those losers, and let's say we have $7,000 in losses that we want to take care of. Well, if you take $3,000 in losses this year, guess what? The next year doesn't go away. So you take in the first year, in 2024, your $3,000 capital loss. Well, the remaining balance of $4,000 gets carried over into the next year. So this year we take $3,000 in capital losses. In the next year, we could write off another $3,000 in capital losses. And in that final year, we could write off the last $1,000 in losses against our capital gains. So keep that in mind as you're investing for the second half of the year, perhaps reconfiguring your portfolio. You are allowed to take some losses, so don't be afraid to get out of those positions that aren't making you money, that are at a loss, because we want to position ourselves to make some money the second half of this year. The markets will still be going strong, and yes, the Fed is still talking about lowering rates. Didn't happen in June. It's probably not going to happen in July, but we might be looking at some rate reductions in the fourth quarter. And if you want to take advantage of that, as most investors do and are expecting lower rates, then by all means, start thinking about reconfiguring your portfolio. Remember, technology, AI, okay, chips, healthcare, China, perhaps consumer discretionary. These are areas you want to look out for as you move things around when you're trying to make yourself some money. So if you have any questions on any of this, please reach out to us at touchstonefinancialeducation.com. We'll respond via email within 24 hours. We won't inundate you with emails to try to get you to come on board. That's not our style here. We educate, we don't sell financial products. And we love to hear from you guys. Or if you want to see shorter versions of these videos, check us out on Facebook. They're no more than 90 seconds in length. And I know it's hard sometimes to sit and listen to or watch some of these longer videos because you're very busy, you got work, so on and so forth. But we appreciate all that you guys have done, letting us know what you think about what we provide. And until next time, thanks for watching. This is Elliott once again with Touchstone Financial Education, helping you along your financial journey. Take care.